It's the most chaotic demand I've ever seen in 31 years.
People woke up, okay, Wall Street bets kicked out the silver guys, doesn't matter. People got the idea, and then once the media got hold of it, people started looking at it.
They're understanding what's going on, and they're piling into the silver market. A lot of new people.
That's a movement. That's a sign of a movement. It's not just a trade to them. It's a movement of people saying, how do we get out of this prison fiat system that we're in?
Hey everyone, thanks for joining us today. What are you all drinking today? I've got some Firestone Walker Brewing Company beer.
Grain Belt Premium, old school for me.
I've got some cocktail here. It's rye and lemon and ginger.
I finished my blackberry margarita, but I'll catch up.
Go ahead.
Just a regular old Michelob Ultra for me.
Fantastic. Well, we've had a crazy couple weeks, especially in the silver market. And I want to start off with Andy Schectman and kind of just to run down what we've been seeing with this whole Reddit phenomenon, the GameStop that evolved into the silver squeeze. And first, I'd like to introduce Andy Schectman. Kaiser, my brother, is on the line to introduce Andy.
Andy Schectman is president and owner of Miles Franklin, a precious metals company that has eclipsed $5 billion in sales. Prior to starting Miles Franklin in 1989, Andy became a licensed financial planner, specializing in Swiss franc investments and alternative investments.
Now, Andy, from your vantage point as being the president of a major precious metal dealer in this crazy time, can you kind of just give us a rundown on what you're seeing is happening really on the physical side of the silver market?
Record demand, not enough supply, not enough people in my office to call back all the people that are calling us. It's the most chaotic demand I've ever seen in 31 years. The U.S. Mint, as an example, has only produced and shipped out somewhere around 7 million coins. And with the demand we're seeing, I'm sure Miles Franklin has sold way more than 7 million ounces in the first couple weeks of this year. The demand is far outpacing the supply, and I guess that's really the only thing that sticks out to me above all else. And I know that that's the truth across the board. When you look at the other online precious metals companies, just about every single one of them is out of stock. In fact, the coin description for half of them is coming soon or remind me or out of stock. And that's true. So I guess to me, so far, the first 7 weeks or so of this year has been specifically crazy demand, difficulty getting supply, and high premiums that continue to defy gravity and move higher.
What kind of premiums?
Well, if I sell a Silver Eagle at $10 over spot, I'm the cheapest in the United States. It would have cost you $3.19 over spot in November of 2019. In March of last year, when premiums took off, the highest I saw was $10 over. Right now, wow. You're seeing $11 and $12 over and $13 over with no let up. Junk silver premiums are in excess of premium coins, as much as $6 or $7 or $8 over the price of silver. And maybe more disconcerting is the inability to source gold very easily. I'm one of only 27 U.S. Mint authorized resellers, and getting gold buffaloes is next to impossible. 2021s, gold eagles in any substantive quantity is next to impossible. The premiums on those right now will be 10%, pretty darn close, between 8, 9, and 10%, depending upon quantity, with delivery delays. And what's unusual, you guys, is that this happens this early in the season. I've seen that repetitively over the last 30 years, but to see it 2 weeks in, 3 weeks into the new year is really, really something that's vastly different. So high premiums, difficulty getting product, accentuated demand. And, people talk about the Reddit phenomenon. We're not seeing people buy this, try to short squeeze and then sell. Everyone is buying it because many have been awoken to what's going on in this market. And I think there's a whole new awakening, a whole new group of people that are looking to precious metals that never have. And you can really see that just by the sheer volume and the sheer inability for the retailers to keep product in stock. Last week, for the first time in 31 years, we shut down trading on Saturday, just like all the online retailers did the evening before. And the reason is going into the weekend, naked exposed potentially, as we all expected the price of silver to gap up considerably on Sunday evening. And indeed it did, not as much as we thought. But so typically on a Friday night, we will go long to a certain degree. We went long 55,000 ounces and sold 90,000 ounces by Saturday morning, at which point my head trader said, you are now 35,000 ounces naked exposed to the market open. And it cost us $41,000 when it finally did open. But you can see the danger in being naked exposed on a very large amount in a market that could substantially gap higher. And this is why all the online companies shut down, not because they ran out of product, even though in some cases it looked like they didn't have much. It was because they were very afraid of staring into the abyss on Sunday night in a market that could open substantially higher naked exposed to whatever orders you would have taken between Friday close and Sunday night open. And so these are things that I never would have thought I would see ever. And you're seeing it and in spades. So craziest time I can ever, I'll say this, March last year, I would have said the same thing. That was child's play in comparison to what we've seen the first month, 6 weeks of this year.
I think we've got a question next for Frank. So I'll introduce Frank Holmes. He's the CEO and Chief Investment Officer of U.S. Global Investors. He's the co-author of The Gold Watcher, Demystifying Gold Investing. More than 100,000 subscribers follow his weekly commentary in the award-winning Investor Alert newsletter. Frank also serves as the interim CEO and executive chairman of Hive Blockchain Technologies.
Frank, thank you so much for joining us today. I wanted to kind of, recap what Andy was saying, how, we've seen the most demand for silver and precious metals that we've seen in all of Miles Franklin history in the last couple of weeks. Now, you've recently really been discussing the whole GameStop situation, the rush into physical silver, and pointing out that this is actually a very positive thing that's happening to the markets. Is the small guy, the minnows, as you say, are really driving the markets now. I'd like you to explain that to our viewers.
So what happened last March was I thought I was going to have to lay off half of my people because all my mutual funds, everything had hacked. And interesting enough, my JETS ETF all of a sudden started to expand in volume. And there were all these 100 share purchases being done, and it continued to grow. And then as it started to grow, we saw other bigger players coming in, buying 1,000 at a time. And then it became 10,000. And then hedgers came in, they were shorting various airlines, but they wanted to de-risk themselves by going long the ETF. So this went from 35 million to 3 billion in assets. It went from trading 35,000 shares a day to 3 million shares a day. And what happened was price discovery by the minnows attracted larger investors. And I'm seeing this in many different asset classes. So it's very healthy because you get this price discovery, which is key to overall capital markets. Now, there's so many negative articles came out, they're all stupid, they don't know what they're doing. But I can share with you from data that was Robinhood was providing to the public that 25,000 people bought JETS ETF before it surged 60%. And they all made money. And I think that that's something that was a big game changer. So then I became very curious to find out where they're getting their information, because there's really not that much research on the airlines. It was all YouTube. And there's all these new influencers like Sam Chu with 2.7 million followers. Another person that I spoke with is 19 years old with 300,000 subscribers. So that world is very, very morphed, and they're more sophisticated. Many came in because the last three crises that we've had, the airlines surged 80 to 120% 12 months later. So this never happened in the 90s when baby boomers, Jay and myself here, when we discovered the mutual funds and technology stocks, and everyone was going crazy over them, there's ETFs now and stocks. So then I went and had every one of my employees open an account at Robinhood and I've got just under 24 employees. They could know what the experience was like. And interesting enough, on their toolbar, they have gold. None of the other brokers have gold. And this led into looking at research in other gold stocks we own that are listed in the US. And all of a sudden you could see this incredible data building of the gold ETFs and gold stocks that were just being accumulated. Silver stocks were just being accumulated, that they could actually buy the GLD and get it in fractions. So I think that this new audience of millennials coming in are very steeped in making money. They're so helpful because they're not shy of gold. They understand modern monetary theory better than most baby boomers do. So it's very, very impressive. And the last thing I share with you is what just before Thanksgiving, I was at the outlet mall at Nike store, and they said no coins. There is a shortage of nickels, dimes, and quarters, that they would only take a credit card or a debit card. And so if you think in pennies, there's a shortage, in nickels and quarters, which are much more plentiful. Can you just imagine what's happening in silver and gold? And then we get this trend now, all of a sudden, silver getting the big bite.
And I'd like to now move to Jay, if my brother Kaiser can introduce Jay.
Sure. Jay Taylor is the editor of Jay Taylor's Gold, Energy, and Tech Stocks newsletter. His interest in the role gold has played in U.S. monetary history led him into analyzing and investing in junior gold shares. He currently also hosts his own weekly radio show, Turning Hard Times into Good Times, and has been a frequent guest on Bloomberg, CNBC, Fox, and BNN, and a speaker at investment conferences. He also works as a credit analyst and lending officer at ING Barings.
Jay Taylor, thank you so much for joining us today. Sure. What I'd really like to ask you is, in this chaotic market in the silver space, how have mining stocks been impacted? How are mining stocks really reacting to all of this?
The mining stocks that I follow are primarily the explorers, the companies that are out looking for viable projects, and they tend to be conservative in their outlook. They don't look for the $100 silver price. They're looking for something more realistic, usually with a trailing average, and then they're basing their projects accordingly. My strategy with regard to the coins and the bullion, of course, I want to own what I think I need to have as a foundation financially. But I'm more interested in the projects, each project on its own. And there's a lot of excitement there. Certainly there's capital that's going into the mining exploration projects now, like I haven't seen in some time. I think it's better than it was in 2011. And so the hunt is on. Now, silver projects, of course, pure silver projects are very rare. So, silver comes along with as a byproduct with copper and gold and other metals for the most part. But there are some exciting developments out there. There's one in particular that I'm following in Bolivia, of all places, and I think that's a very exciting development, a very large-scale project. So, yeah, there's a lot of gold and silver projects. So the main thing that I see is that this bull market in the precious metals is certainly making it possible to raise risk capital, to put holes in the ground and find projects. And there's quite a bit to be excited about in that regard.
Right now, we are going to move over to Robert Kientz. Robert started goldsilverpros.com in 2018 after writing on various other financial blogs for almost 10 years. His work has been featured on Yahoo Finance, MarketWatch, and NASDAQ.com. Gold Silver Pros shows how to capitalize on what Robert believes to be the biggest generational wealth pattern of our lifetimes.
Robert, one of the big things that we're hearing about in the alternative media, as we've been seeing people rush towards silver, is shortages developing. We see the US Mint is having a hard time, keeping up with all the demand, and also like the Perth Mint, we've been hearing the same thing. So with respect to shortages in the silver market, what has your research been telling you?
I think at the current price level, people have been hoarding it. I was documenting on our channel the other night, I think the last 4 weeks, there have been 124 million ounces bought between the COMEX and the various ETFs and funds. And so what that is, I think, is an accumulation pattern for people that need silver for industrial use or want it for investment use, accumulating at this price. And given what we're seeing from bullion dealers like E&D and others, the retail market has gotten very tight. What we see on the COMEX is there's not a whole lot of deliveries in silver going on right now. A lot of that's moving over to the London market through the ESP mechanism. So it appears as though we're having some sort of short-term supply squeeze based upon these prices. And I think for people to let go of their silver, whether it be sitting in the COMEX vault or whether it be sitting in private hands, I think the price is going to have to go up quite a bit.
Now I'd like to pass it to Chris, but first let's introduce Chris.
Chris Marcus is a former equity options trader on the American and New York stock exchanges, financial writer for Miles Franklin, and founder of Arcadia Economics.
Now, Chris, the question I'd like to ask you is kind of piggybacking off of the question that Robert addressed, was shortages in the silver market. Now, you've recently reported that there's even, it seems to be, shortages in the 1,000-ounce silver bar market. So that's actually really interesting, because if that's true, then it's not merely that retailers, right, is like the coins and the 100-ounce bars and everything like that. That takes a little while to produce those, right? So it could be maybe we're just seeing a production issue. But if we're seeing these 1,000-ounce bars, there's a shortage in those as well, that might be signaling something even greater. What is your take on, and what are you seeing in shortages for silver?
Well, I was stunned by what I heard this morning. And again, I'm not on the front lines of a bullion dealership, although fortunately Andy's here, because Ted Butler did an interview yesterday to put this in context. And Daniela Camboni said the same question. Is it just retail silver? Is it wholesale? And he said it was the 1,000-ounce bars too, because he was citing the 110 million ounces that allegedly went into the SLV trusts about a week ago. I have yet to find anyone who believes that's even possible, let alone that it happened without being taken from somewhere else that I would suggest is not being accounted for properly. But, I was thinking, all right, well, we don't know that yet. I did call Andy and said, let's say I had a customer had $10 million, wanted to buy silver, wanted to take delivery now. Andy, would you like to say what he said? I mean, you talked to the guy, and I think the answer says it all.
I was told that the earliest that it could be delivered was March, and that the only way that they would deliver them to us is if we promised that we were not selling them to another refiner, because they didn't want to usurp their production supply for another refiner being able to do the same thing. Typically, 1,000-ounce bars are available lickety split. The fact that we were told it's 4 weeks and that they were being made right now, that they don't have any that they can just give us off the shelves, and this is from a COMEX depository, was kind of strange. I've never heard anything like
Andy,
that.
what was the reason they said that it would take 4 weeks?
Because they couldn't get a truck to deliver it until the first week of March.
I believe you asked him, even if if we pay, I think you directly asked him if you pay a premium. Somebody wants the metal now, they're willing to pay a premium, and they still said there's no trucks.
No trucks. And the premium that they were quoting, I believe, I've had a long day. It's been crazy here today, but I think they told me it was 60 cents above the May future contract, and not until March delivery. And I had to promise that I wouldn't sell them to some other refiner. That stuff you don't hear when you call on 1,000-ounce bars. Normally, I can get as many 1,000-ounce bars as someone could choke on. And it's the first time I've ever heard something like that.
Andy, after I called James Anderson from SD Bullion. He said the same thing. I called a third dealer from a large shop that people would know, who asked me to leave them name private. And it was interesting, some of the comments he said. I'll read through those quickly. Premiums are rising on 1,000-ounce bars. They're going up rapidly. Something I know people wonder if the dealers are scalping. He mentioned wholesalers have raised their bid, and he emphasized drastically. Said 2 weeks ago, premiums on 1,000-ounce bars were 20 cents. It's gone to 85 cents. These are supposed to be spreads that are stable. He commented several times, it's almost, his words, comical how often the wholesalers are hiking their prices. I didn't think he meant that in the sense that they're gouging, but it's just like he felt, every time it turns around, they're hiking the prices. He also said that you can get $10 million worth of silver, but it's going to take you a month or more. And the last thing, he got the feeling is like, do these guys have it?
That's the feeling I had also.
And in all fairness, I did contact Stefan Gleason from Money Metals last dealer, he said he had not checked as thoroughly, but he still reported premiums around 40 to 45 cents, and so, I mean, if everything is normal in silver and there's no stress in the system, somebody has $10 million and they're willing to pay a premium, and the only answer they can get from at least 4 dealers is that there's no trucks around, that doesn't seem like regular liquidity to me.
Is that the same problem, issues in Asia?
I have not confirmed there yet. Patrick, what are you hearing?
1,000-ounce bars, right? LBMA bars. Let me check. Yeah, we're at about 161 bars we have, but I can tell you that the buying frenzy does continue. We're even having guys that are starting to sell, which I guess that's their own personal choice. But with LBMA bars, for right now anyway, we seem to be okay with it, but who knows? I mean, if it's affecting you guys there, it'll come around and affect us as well.
Patrick, if you had a customer say they wanted $10 million worth of 1,000-ounce bars, when can you get that to them?
That one I would have to ask our purchasing guy, Berhel, but he's also saying that it is getting a bit difficult to source, and as Andy mentioned, gold is getting very difficult to source as well. So again, whatever's happening there, you can count on it happening here as well. So if you're really searching for it, your search may end up taking you all around the world.
And if I can add one last thought, this is before Janet Yellen supersizes Jerome Powell's hyperinflation bomb.
And that's just an amazing research that you've done, Chris, really contacting the dealers and just like, okay, what can you actually source right now? Passing it to Patrick. I'd love Kaiser to introduce Patrick.
Yeah, Patrick Vierra is a Singapore-based host of the popular YouTube show Silver Bullion TV. The YouTube show has more than 60,000 subscribers and nearly 6 million views. Silver Bullion TV is part of the Singapore-based precious metal storage company Silver Bullion.
Now, Patrick, on the same line of thinking, like, I guess kind of just backing up a bit, about 2 weeks ago, what was going through your mind when you first saw this silver squeeze story? And probably, I'm assuming, phones were ringing off the hook for you guys.
Well, yeah, it was. Thanks for having me on. What was going through my mind was I'm sitting about 10 feet or so away from our strong room where we keep all the silver and gold in the shop, but then we also have the vault. And I'm watching everything just flying off the shelves, and I'm like, no, stop, wait, I need to get some as well, right? So I'm getting this FOMO going on as well. But it took me back to last year, to March, what we saw, and it happened again, but it seemed the feeling was just very different. I mean, the rush to buy silver was incredible, and we saw the premiums go up, and then we had the concern where, okay, guys are coming in $29, $30 spot price, they're buying in Sing dollars, they're buying coins at over $40 a coin, Singapore dollars. And the concern was what happens if, again, the paper markets, they do that dump, and then guys are going to be holding silver at high prices again. And we ended up seeing guys selling shortly after it happened. But I think it's sort of stabilizing, but still revving. The engine is still revving, but it's not, so it's not spiking as much as before. It's just on a higher tone right now, and it's continuing to move on. But guys they're understanding what's going on, and they're really piling into the silver market. A lot of new people are piling into the silver market. Gold, not so much yet, but I'm pretty sure that'll happen as well as we start to see that ratio continue to go down. But again, I think whatever's happening in the States, in the shadows, it's also happening in Asia, and maybe sometimes in a different way, maybe sometimes might be multiples higher, and sometimes maybe not as much in certain areas, but it's happening all over the world. So I would say, if you don't need to sell your silver, don't sell it. Just hang on, keep accumulating, because it is getting very, very hard to source, especially coins. As Andy said, even our website, a lot of coins are pre-orders. It's not going to be here for weeks. So, we're seeing the same things. The frenzy was happening, and then you had guys who understand. They're continuing to add to their positions, add to their stacks. The bigger investors, They're jumping in on the LBMA bars. So I don't know how much longer those 161 bars are going to be there in storage as well. Just to say that the demand is definitely outpacing supply as well.
We're moving to Lobo Tiggre next. Lobo was legendary speculator Doug Casey's protege at Casey Research for almost 14 years until early 2018. He wrote in Casey's flagship newsletter, The International Speculator. Now he runs Louis James LLC, independentspeculator.com, to inform, educate, and enable action for an elite group of savvy investors and those who wish to become such.
Lobo, what I'd like to ask you is kind of, again, taking a step back and looking at why did this happen now, and what caused this silver squeeze to happen, this rush into silver. From your research, why do you think this happened now of all times, right? And what do you think actually fundamentally caused this?
Actually, I want to harken back to something that Frank said. I think this may be more exciting, as exciting as everybody has got me already in hearing these stories. And just looking at how tired Andy looks, just look at Andy. I mean, you don't need to say anything else. The guy's wiped out from all his selling silver. This is very exciting. But what Frank said really touches on something very important, I think. And without getting too lost in the weeds here, I think it's hilarious that some people who are already silver bugs jumped on the bandwagon at Wall Street Bets and said, hey, if you want to get on a massive short story, how about the shorts in silver? And they got basically shouted down and booted out. But by then the cat was out of the bag. So I think of this as being, like the expression says, an idea whose time has come. And I'm not saying this is all Wall Street Bets or Reddit, but more like an idea whose time has come. And maybe some of the ground that's prepared for this is actually Bitcoin. As much as many gold bugs and silver bugs like to hate the cryptos, they've been saying for years, fiat currencies are bad, they're dangerous for you, there's nothing behind them. And they've been educating an entire generation or two on the dangers of pretending that paper can be money. And then you've got this thing more recently of digital gold and this drumbeat of digital gold, digital gold, digital gold. Well, if digital gold is a good thing, well, that implies that gold is a good thing. If gold was bad and something you wouldn't want, why would you want digital bad thing, right? So I think there's been actually a huge amount of prep work here, getting, as I say, entire generations of people who, if you said fiat currency, only a few wacky libertarians would even use that sort of terminology. And now all the talking heads on the financial media talk about the dangers of fiat currency, and young people on Yahoo Finance and so on, they all nod very wisely about the dangers of fiat currency. And so I think this was just an idea whose time had come, and people who were prepared to understand something that, before we lonely gold bugs out there in the desert were the only ones who seemed to care. Now everybody cares. Everybody gets it. Nobody trusts the government to produce money and keep the money supply secure and sound. I think this is fantastic. And so this is just, you could call it the match on the powder keg, or the straw that broke the camel's back, whatever. All these just idea whose time has come. People woke up. Okay, Wall Street Bets kicked out the silver guys. Doesn't matter. People got the idea. And then once the media got hold of it, people started looking at it. And as Frank said, younger people, they're not dogmatic or religious about these things. They're seeking alpha. And if there's an opportunity in silver or gold, then they'll take it. They're not going to hate it because, it's old fashioned. They want to make money.
I'd like to just chime in on that. And that's genius. What he just said is exactly what I see. I don't see a bunch of people running to take advantage of this. I see a whole awakening by a whole wide swath of people. The very fact that I can hardly get any gold right now should crystallize that. It's not just the millennials that are chasing this idea. Everyone that I talk to, I'm getting calls by the droves of financial advisors on behalf of their clients. People are waking up to exactly that. And maybe it's the law of unintended consequences in action, but exactly that. And it's a mass awakening all of a sudden, on top of the fact that perhaps it was spurred on by the Wall Street Bets, but it's much bigger than that. For the very first time, as you said, an idea whose time has come. And I think for the first time in my 31-year career, I am really, really believing that because we're getting a whole subsection of people that we've never had before, and lots of them. And so I think that was really well said. And also like just to mention something about what Patrick said. It's not just silver. Might be a silver squeeze, but I'll tell you quietly, all of a sudden, gold's almost harder to get, and it's disappearing. It's so hard to get Canadian Maple Leafs. There's 4, 5, 6 weeks back ordered, and highest premiums I've ever seen. Gold Eagles, Gold Buffaloes, everything is disappearing. Not just silver. This is a much bigger awakening and a bigger movement than just a bunch of millennials that have lit the fuse. I think it's the biggest movement that I've seen ever in terms of demand and from a group of people we rarely, if ever, hear from.
What about the Panda gold coin?
Can't get any, none. I mean, that's the thing. Things that were normally available are just not available right now in any quantity. And if you find them, you're paying huge, huge premiums. To pay 10% for a gold eagle is something I've never seen in 30 years, ever.
And to that point of really how this is not just a bunch of people rushing into precious metals to get rich, they're seeing the real value of it. I'd like to move now to Tavy Costa, but first, if my brother Kaiser can introduce him.
Sure. Octavio Tavy Costa is a partner and portfolio manager at Crescent Capital and has been with the firm since 2013. He built Crescent's macro model that identifies the current stage of the U.S. economic cycle through a combination of 16 factors. His research has been featured in financial publications such as Bloomberg, The Wall Street Journal, Financial Post, and Reuters.
Tavy, what I'd like to first ask you about is about this value that is in precious metals, and especially silver. You've talked about how really anything for silver under $30, silver is probably the most attractive asset on the planet right now. Can you expand on that?
Sure. Thanks for having me, by the way. What I would like to say is I think the macro environment with monetary policy becoming a funding tool for the government, where they have to suppress interest rates through the expansion of the monetary base, it creates a supercharged environment for assets that serve as an alternative to the monetary system. And then gold, silver, Bitcoin all serve as some of those assets. And the Fed is forced to run the economy really hot right now. And the global economy is on the verge of a commodity supply super shock, in my view. At the same time as we just had the largest wealth transfer from the government to the people. And not a lot of people are looking at this, but back in 2008, when we had money printing and we had fiscal stimulus, actually the bottom 50% of the population lost close to 84% of their wealth back then, their net worth. Today, actually, we saw in the middle of a recession, probably more like a depression, the largest increase in net worth ever or in the history of the data. So, this is happening across all classes in a society, and it's about $13 or $12 trillion of wealth creation. At the same time as we're seeing a breakout in commodities from a 12-year resistance line. So I think there's a point to be made about an inflection point actually for inflation, where investors are beginning to find that there's a lack of alternatives to invest in terms of any investment that yield more than inflation. So it forces investors into a space of known yielding assets, and that's commodities. That's where it's cheap. And certainly gold and silver would fit that category. But silver for me is really a little bit more in terms of the not only the gold to silver ratio, but when you look at this move towards a green world, or just when you look at the highway from the old world to the new world, silver is that highway. So I think that when you add the fact that we might have a supply cliff issue, especially among the gold and silver producers, as we point out in some of our research. It seems to me pretty clear that a lot of investors and large companies will be looking for large, new deposits of gold and silver, new discoveries. At the same time, we're seeing CapEx cycle for silver miners declining. How many times in history we've had silver going up 50% and production is actually down? Or just look at capex for the silver miners, which is hard to measure because, as you all know, it's hard to find a pure silver miner. But doing my best, I can see that probably about 18% decline in capex on a year-over-year basis for silver producers. So those numbers are staggering to me, and I think that gold miners are likely to be the new growth stocks. Finally, actually, gold and silver stocks are trading a more attractive free cash flow yield than tech stocks. Tech stocks are the darling of the market here. So a lot of reasons why I would like to own silver. But if you put it all together with the macro imbalances, along with the political environment, we just had a Democratic sweep. We had Yellen, Janet Yellen is back. We had Bernie Sanders is on the budget committee. We have the IMF calling for the Great Reset. We got the Fed saying that they're not thinking to raise rates. We got unlimited QE. So it's sort of crazy to think that we're only getting started at $27 or so trillion of public debt. So for me, owning assets like gold and silver is sort of imperative.
Well, thank you everyone for joining for this first half of the Mugs and Metals. We want to open it now for open discussion regarding, if you had any comments on everything that's been discussed today, kind of the maybe opening question for this open discussion that I'd like to pose to anyone who would like to chime in is the silver squeeze over, or are we just seeing the beginning of it?
I'll take that one. I think we're just seeing the beginning of it because, as people were saying earlier, was talked about, we have a new class or generation of investors who've gotten pretty savvy to the game. And it's really encouraging to see the millennials get involved here because after all the propaganda and crap that they're fed in the schools and in the media, for them to kind of overcome that and come to precious metals, before we have our next crisis, I think is extremely encouraging. And I think that they understand and know how to use technology better so they can get to information very quickly, especially over social media. And they've really been powering it. We saw it first in Robinhood a few months ago when they got into gold, and gold popped up on Robinhood's top trades. And it was them driving it. Now we're seeing it in silver. We're seeing it with Wall Street Silver on Reddit, and they're really getting involved in the precious metals. And they come to my channel and are blowing up my channel saying, hey, I'm so glad that you're talking about this, and really trying to educate their friends. And so that's a movement. That's a sign of a movement. It's not just a trade to them. It's a movement of people saying, how do we reach safety? How do we get out of this prison fiat system that we're in? How do we express ourselves financially and provide value? And I think they've done a really good job of that. So it's really good to see. That was the group that I was most worried about, especially my kids are in that generation. I was worried about them not kind of figuring out the value of the precious metals, and I'm so happy to see that they are.
I'd just like to add to that on silver, almost 20% of the demand is solar panels, and this $1 trillion is going to go into this infrastructure spending is all green. And we saw $1 trillion raised in Europe for green spending. I think the backdrop of this industrial demand for silver is like the love trade for gold, that every time gold sells off, it's China, India, Southeast Asia that comes in and seems to buy. And it's like 60% of that demand. We're talking a lot about the fear trade and interest rates and money printing, et cetera. But for gold, it's so important. Every major sell-off, it comes out of, there's 6 times the amount of gold worn by Indian women than there is in Fort Knox. And I think that more and more young kids are educated and informed. And if they're green orientated, they know that silver is a key component. And the fact that inflation, steel prices are up 70%. Copper's at an 8-year high. Lumber prices are up 40%. Food prices are up 21%. Where this is real CPI is not, I think, being reflected. And I think that we're going to see this sort of secular bull market in these metals, and in particular silver.
I'd like to ask a question maybe of Andy, a theoretical question that I'm sure you can't answer, but what price would it take to clear the market so you didn't have to wait months and months to get your silver?
That's a tough one. I don't know, but it wouldn't take a lot of money by today's standards. I would think that Steph Curry could probably take one of his year paychecks and clean out half of the the online dealers in the country. Not a lot, not as much as one would think. I don't know, but I think that the market is really quite thin, and it's really not easy to continue to get product in any substantive quantity.
Yeah, but at the right price, people would let it go, in theory.
Well, yeah, I mean, for people to sell. Well, I can tell you that at this point right now, and I think that would be at $50. That's the target that everyone's looking at. When it gets 50, the double top, would it pry some money out? And yeah, one of the things that Patrick said is that he's seeing people sell. We have not seen anybody sell. Nobody is selling here, and so I would think it would be $50, assuming that came with an environment that wasn't very scary and freaking people out, because there's a whole level of concern that goes above and beyond making money right now that is kind of accentuating the whole trade. But I think $50 is where I'd expect to see people try to sell some and unload some, pay off debt or whatever it may be. And I think that's probably the first stop anyway.
I'd like to jump in with a point if I can. As much as I like stacking as much as anybody else, I think the real opportunity I see right now is in the stocks. We all have seen these charts about how gold and silver stocks have been lagging the metals in general. Just this last weekend, I put out some new charts on silver specifically. I need to put these up on the web. They just went out in an email. But it's really interesting. I mean, we all remember, you guys remember how much more pounded into the ground the silver stocks got in 2014, 2015, down towards the bottom. I mean, silver was hurting, but the stocks just got smashed through the basement floor. And then 2016 happens, silver starts coming back, and the stocks went through the roof. And there were certain large silver companies that will remain nameless that were not profitable that went up 500% in the first 6 months of 2016. That's the kind of leverage that that's why we buy the stocks. We want to see the stocks give us leverage to the underlying commodities. And the reason why I bring this up is because we really haven't seen that lately. Like that's the normal expected move for the stocks to give us leverage over the metals. And over the last year, you look at the main ETFs for silver that have silver companies in them, and they're pretty much tracking silver. They're all up around 50% over a year ago. Silver's right in the middle of the pack of SLV and PSLV. And I think that really highlights an opportunity. The silver stocks have not really moved yet. I think there's been so much fatigue or bearish sentiment. People are just so tired of the manipulation and the BS in the market. A lot of people just gave up. But now this fire is lighting under there. I could really see the silver stocks doing as they always have done historically and taking off. So I just want to highlight that as an opportunity. It's certainly a top priority for my own research right now is to find any overlooked gems in the silver stocks that I don't have in my portfolio yet.
I agree with that very much. I know First Majestic, I bought some in January of 2016 at $3.40 a share. And by July, it was somewhere in the neighborhood of 16 or 17. So I agree that there is certainly room at this point for everyone's portfolio to have some mining shares. And there are no better values, arguably, than the silver, which have the leverage, have been ignored and been pounded down, and completely agree and concur with that.
Now, another question just kind of posed to anybody who would like to jump in is kind of getting back to what Andy was saying earlier, how really the untold story amid this whole silver squeeze is gold, how it seems like it's hard to find physical gold and hard to source physical gold nowadays in the last couple of weeks. So any particular anecdotes that anybody would like to share, and kind of what is everyone's perspective on this kind of hidden story that no one's talking about?
Well, I mean, I'm happy just to try to pry some answers out of the panel. All I can tell you is that here again, everyone's only talking about silver. No one is talking about a gold squeeze. But the fact that the U.S. and the Canadian Mint have no product, by and large, in any substantive quantity, by the fact that premiums on Canadian maple leafs are through the roof, and you wait 6 to 8 weeks to get 2021s, by the fact that you can't source as many gold eagles and gold buffaloes 2021s as you want, speaks volumes. It's never happened before, ever. And if it does happen, it happens late in the fall. To see it happen in the second week in January, people should, and that's when it happened. They sent out to all of us primary or authorized recipients, they sent out a letter saying we're on allocation. And when I call the primary distributors and I'm told that they have no idea when those allocations will be re-upped when the next one comes, that is really concerning, and no one's really talking about it. I mention it simply because the focus has been on silver, and to a large degree, rightfully so. But the bigger piece of the puzzle is that gold, which, you could argue is more of the big money, has been front ran. And there are big money players that have accumulated copious amounts of gold, making it very difficult to get anything. And I've never, ever seen that problem, ever. And I think it's more relevant when Chris asked me this morning about a $10 million theoretical order. How could we do it? It's more disconcerting that I could not do it right now in Gold Eagles, Gold Buffaloes, or Gold Maple Leafs without a considerable delay, without massive premiums. That is, to me, the bigger piece of the puzzle, because gold is kind of the mothership, and gold and silver have a 90% correlation just about since, through all of history. As one goes, so too will the other. They will pull each other up. One will lead or one will follow. That's irrelevant. But I will simply say to you that we're all looking at silver. Don't forget gold. In fact, I would almost submit that right now it's every bit as challenging, or more so, to get a large purchase filled in gold if you take gold bars out of the equation. 1 ounce gold bars are available, but the coins are becoming really, really, really challenging to get. And that is, when you realize it's 70 times more valuable than silver, the fact that it's just as hard to get a $10 million order filled becomes concerning.
Yeah, if I could add into that, our gold coins, they're weeks out. I mean, they're weeks out. And a lot of the gold coins that we do have in stock, they're older gold coins, which means they probably came from buybacks. So as far as getting new stock, new inventory, as Andy said, it's a challenge right now.
I got cut off there earlier and I had to go find another computer. So I'm sorry about that. And now to tell you, silver prices are going to go outer space. But I think what's really important is to recognize that there's also a sea change in the gold stocks and silver stocks. In tracking the 100 gold producers around the world, it was last March was the first time in over a decade that the yield, the free cash flow yield, went positive. It's been negative for over 10 years. And interesting enough, the S&P 500 had a positive yield of about 2.5%, and it went negative. 20% of the S&P 500 stocks cut their dividend, and they still don't have a really strong, robust free cash flow yield. But the gold stocks have continued, and that's a reason for Buffett coming in. And I think the fact that Buffett has come in and has purchased, and then he sold some of his Barrick off, but the fact that he bought it, you saw in the summer, Investors Business Daily, all of a sudden picking gold stocks. And what we saw in that model was Franco-Nevada, Kirkland Lake. These are stocks that are showing up in their Nifty 50 of great price action, and they have to have a quarter-over-quarter growth in revenue and earnings, and a year-over-year growth greater than their peers in growth in those factors. So now we have a new set of board of directors that destroyed these companies, and I think there's much more discipline, and I don't think they're going to go and make dumb acquisitions, or they're going to spend a lot of exploration dollars. They're going to be very, very caught up about, can I raise my dividend? So we're not going to see a whole lot of big exploration, big M&A work. We're going to see good paying stocks raising their dividend. That is only going to limit supply. And so whenever you get that supply demand factor in balance, we get what we saw in Bitcoin this year. Last year in May, they have the annual supply. Can you imagine today if 100 million ounces of gold were all of a sudden only 50 million ounces produced? What would that do to the gold price? It'd be 10,000. What would it do to silver prices of half of the supply, which is halved? And it took, interesting enough, 6 months for Bitcoin all of a sudden to take off. And I think that you saw, like I, as the chairman of Hive Blockchain Technology, we're the first to go and do crypto mining. Well, Ethereum went up 480%. Can you imagine what happened if silver went up 480%? Well, Hive went up 2,500%. So that's what can happen to silver stocks, as you're talking earlier. And this is what can happen to gold stocks. And we're not going to get this crazy spending. So I think the supply demand factors, which you're talking about, they're going to remain very, very, very productive in the business. You're going to have a decent spread. And if you can source coins, et cetera, I think it's a great bull cycle that a lot of people are dismissing still.
I'd like to throw in one more thought here specifically to silver. And that is, when we talk about the retail difficulties, I hadn't heard yet that the 1,000-ounce bars were getting hard to find. But one of the pushbacks on the silver short squeeze has been, okay, well, you go down to your local coin shop and you can't find silver rounds or eagles. That's not going to affect the spot price. The futures trading in New York, they don't care about your problem getting a silver dollar at the coin shop. But if the coin shops are empty, if the bullion dealers are empty, if everybody's empty, well, maybe the retail guy will start piling into the ETFs. And guess what? The ETFs could stand for delivery at the COMEX. The little guy, he's not going to go take a 5,000-ounce bar off the COMEX, but the ETFs could. So I'm just suggesting, I'm not making a prediction here, I'm just suggesting that this kind of demand, if it continues, I do think there is a trickle up scenario here where the retail really actually could have an impact on the paper trade in New York and London.
And I will say that a few of my subscribers, some well-to-do business owners that follow me, have contacted me seriously about starting a fund to go take silver off of the COMEX. And they're willing to put in $20,000, $30,000, $40,000 each to do it. So I think there is a movement for some people to get involved in that COMEX trading.
That's what I think is beautiful about what's happening is that, all right, we know, not a big surprise, governments lie, banks cheat and steal, yet maybe we'll come back one day and I don't know, and we'll see it differently, but from everything I look at, it sure looks like those banks went all in last Tuesday on a bluff in the face of the wildest buying spree in silver, whether physical or ETF. David Morgan a week ago came on the show. He said even the Hunt brothers, he hasn't seen anything like that. So while everybody was watching, they tossed their paper. And to me, it seems like the people called them. A couple of years ago, that probably would have sent it down for a while. And fine, just keep throwing paper. It's nice. I love the Wall Street silver. These guys are inspiring. The energy they've brought to our sector in 2 weeks, it's like we haven't done this much, gotten this much, we've done this much, but the impact has gone exponential in a very short period of time. And I think it's great because now, banks can put out headlines, they can hammer contracts. We can also read a price and volume chart. And fortunately, I reached someone at the CFTC yesterday. Now we have thousands of people that are getting ready to submit claims because, for all the crimes these guys commit, geez, could you watch one of those old movies and at least cover your tracks a little bit? They leave the fingerprints everywhere. They think people are too stupid to ever stand up and do anything. So I applaud everyone who, in a completely honest, moral, and legal fashion, is just standing up, spreading truth, and they're finding out quickly. The banks don't have. It's like you punch them in the face with a little truth. You see how quickly they go down.
Before we say goodbye, I just want to thank you all again for being here. Some of you have been here before, and some of you guys are here new. I do appreciate it. Honored to be in your presence, and thank you very, very much. What you all have to say is fascinating.
Yes, thank you everyone for joining us today. It was a pleasure to have you all. I guess before we let you go, how do you guys enjoy your drink? Mine was Firestone Walker Brewing Company 508. I have to say, it was quite good.
Hi, old silver.
I'm ready for number 2.
I must have liked it because it's gone.
Same here.
I'm on water here.
There's still time.